Hello everyone. Thank you for attending this session, and thanks BTS of course for giving us the opportunity to share our research. In this presentation, we are going to talk about the findings from our research on consumer acceptance or non-acceptance of crypto payment as a specific use case for cryptocurrencies. So the cryptocurrency domain has been attracting a lot of attention over the past few years, with a growing number of cryptocurrencies that have emerged and are being traded by an ever-increasing number of users in the global market. There are more than 8,000 cryptocurrencies in the market, and as you can see in this chart, the number of cryptocurrency owners globally has almost tripled in 2021, with almost 300 million users. And it is predicted that crypto user base to hit 1 billion in a short time. Such a fast rate of user adoption and acceptance has motivated shifts in the business side and also motivated applications that go beyond only buying or trading crypto. Crypto payment is one such application that refers to the use of cryptocurrencies as a method of payment by consumers when buying goods or services, for example, in e-commerce or online retail. The use of crypto payment is actually a precursor to the mainstream cryptocurrency adoption. So far, more than 18,000 businesses began to accept crypto payment, including famous companies, and the number of crypto payment transactions is increasing. But this is much behind how the cryptocurrency landscape is growing. Crypto payment is mostly a fringe tool and is moving towards the mainstream use much slowly. The main reason for this is the lack of demand from consumers, and this motivated us to do the research to explore why is that. In our previous study, which is in Revise and Resubmit, we focused on the impact of consumers' perceptions about privacy and security aspects of cryptocurrencies, because we observe a trend of growing consumer concerns about privacy and also security due to the increasing number of breaches that occurred, the increasing number and complexity of emerging privacy and security threats in online environment. And on the other hand, cryptocurrencies have unique characteristics such as elimination of intermediaries, lack of central authority, inadequate legal and regulatory support, and these characteristics may introduce additional privacy or security concerns for the consumers. So we examined in an empirical study that how these concerns may influence consumer trust in crypto payment, which is a key determinant of intentions and relational exchanges over the long term. So our empirical results demonstrated that consumers have concerns about both privacy and security risks of using crypto payment, but interestingly, only their privacy concerns contribute to their level of trust in the technology. Our results also showed that there are some misperceptions about cryptocurrencies and their features that may create problems. We indicated that there is a need to enhance consumer understanding of privacy and security aspects of using cryptocurrencies as well. Following that study, we extended our research beyond the risk aspect to identify other barriers that might exist to consumer acceptance of crypto payment. To do so, we focused on resistance or rejection behavior from consumers and applied the theoretical lens of innovation resistance theory, or IRT. The IRT offers a comprehensive understanding of barriers to innovation adoption at the user level and articulates consumer resistance or rejection of an innovation in terms of active and passive resistance. Active resistance emerges from the characteristics of an innovation that form functional barriers, and passive resistance comes from existing beliefs about an innovation, which is reflected in terms of psychological barriers. In addition to those barriers proposed by the IRT, we focused on a predominant attribute of the cryptocurrency domain, which is high volatility. We wanted to examine if volatility is also acting as a barrier, kind of situational barrier, and if so, how it's related to active and passive consumer resistance. So from the IRT, we hypothesized that consumer resistance to crypto payment is potentially driven by 5 barriers. First, the tradition barrier. It means preference of consumers to stick with the status quo in using fiat currencies for their purchases. The image barrier, which means having a negative impression of cryptocurrencies that could be for any reasons. The usage barrier as a functional barrier, which means efforts required to learn how to use cryptocurrencies and the changes that it brings due to its complexity or the need for more technical skills. The value barrier that refers to consumer resistance due to the lack of perceived value in using crypto payment or being uneconomical or the lack of advantages compared to using fiat money for payment. And the risk barrier, which means resistance due to the risks that potentially come with using cryptocurrencies, including privacy and security risks that we examined in our previous research. Additionally, we hypothesize that psychological barriers drive functional barriers in this context. It means that consumers who have a more negative image of cryptocurrencies or those who stick to the status quo more than others perceive less value, more risk, and more effort required for using cryptocurrencies. Finally, we developed hypotheses about the role of perceived volatility. We hypothesized that volatility, instability, unpredictability, and rapid changes in cryptocurrency domain in terms of prices or, generally speaking, the activities in the market result in higher consumer resistance to crypto payment, both directly and indirectly through their impact on the functional and psychological barriers. It means that higher degrees of volatility result in a more negative image of the suitability of the specific use case of crypto payment. It results in being more satisfied with the status quo, and it also causes that consumers perceive higher risks, less value, and more complexities with using cryptocurrencies. As you see, empirical data support these relationships except for the impact of usage barrier and risk barrier. We also performed an importance performance analysis to identify which barriers are more important. As you see, the volatility is identified as the biggest impediment, followed by tradition and then image barrier. These results indicated that the lack of consumer demand for crypto payment is more due to psychological barriers rather than functional ones, or it is more of a passive than active resistance. Regarding the usage barrier, consumers do not view using cryptocurrencies to be complicated, so lack of skills is not a reason for non-adoption behavior, particularly with our sample, which consists of young individuals who are more technology savvy and typically do not see using innovative applications much challenging. In terms of perceived risk, we already found that it is a significant determinant of consumer trust in crypto payment, but our results show that it is not a significant factor among other predictors of consumer resistance. So although the cryptocurrency domain is highly unregulated, the resulting risk of making cryptocurrency transactions is not perceived as a major barrier. Our results also indicated that consumers do not see much value in using cryptocurrencies for buying goods or services, and that's a major reason for non-adoption behavior. This could be because people see more value in investing in cryptocurrencies or trading cryptocurrencies, so it's less attractive for other applications. And finally, our results show that the current volatile and unstable cryptocurrency domain is a major impediment to its mainstream use. So for the foreseeable future, as long as the landscape is rapidly changing and evolving, it is not likely that cryptocurrencies receive much widespread applications beyond the investment or for securing assets. All right, thank you so much for your time and attention, and I'll be looking forward to your questions.